Hi, let's cover my Elliott Wave analysis on Bitcoin, and in this video I will focus on the 1 hour time frame as it has an important impact on the Elliott Wave probabilities of 4 hour time frame and daily time frame Elliott Wave scenarios. Is this move to the downside going to be a 5-wave structure? Well, if so, we look for a 3-wave up and a 5 down. If this structure turns into a 3-wave structure, the probabilities switch and the probabilities are higher for price to take out this high and as a bare minimum continue this range. In this video, I will explain why that is. Starting with the first scenario in random order, which is an impulse to the downside. So here we then have a wave 1, 2, 3, 4, 5. Then the update yesterday, I highlighted that a wave 3 and a wave C is the same low. After a wave 3, you're looking for a 4 and a 5, so you want a corrective move to the upside. After a wave C, one can look for larger structures towards the upside. But from a trade management point of view, if one executed at the high, having a short to the downside, once you see price slowing down, curving into an area of support, TPs are interesting, and then you gotta wait and see if it turns to be a wave 3 or a wave C, but at least you took a little bit off. So in this particular scenario, we would like to see continuation to the downside. Invalidation for wave 4, 88.8k, the 0.618, taken from the end of wave 2 to the end of wave 3. In general though, I wouldn't really like price to move beyond this level, 87.7k, as we don't have a lot of resistance over here. If price would start to close 1 hour candles above this wide line, like above 88k, you're arguably going to consider probabilities to decrease for a potential 4. Even though it didn't touch the 618 yet, it's not really what we want to see as we have a lack of resistance over here. Now, after 5 waves to the downside, we're looking for a move back up. So we have 1, 2, 3, 4, and then get a 5, and then you look for a retracement back to the upside. You want this to be a nice corrective retracement, as this provides another opportunity to look for a move towards the downside and continuation to lower lows. Of course, this wave 5 here can take out the low, doesn't need to, right? But it can take out the low. And inside this wave 5, we want to see a 5-wave structure. So generally you start with a few 1-2s, then you get a wave 3 to the downside, and with a few 4-5s, just like you see over here, price curves a little bit, starts to slow down, decrease in volume preferably into an area of support, which then provides an opportunity for a move towards the upside. So that is something that I will be looking for if we get that move towards the downside. Now then come the ABC scenarios, A, B, and a wave C towards the downside. At the moment, when we look at this structure, if we would consider a wave 4, preferably it's a corrective move. Wave 4, it has to be a corrective move. Wave 4s tend to be sideways corrective structures more than zigzag family structures, but this is quite a sharp move towards the upside. And as you can see, it also moved beyond the lower degree wave 4s at the moment. So you really start to consider the potential of an ABC to the downside here instead, and going to a 15-minute time frame. You can also see that, well, when we look at this structure, it looks a bit impulse-ish. No, you have a couple of 1-2s here, overlap, you get your wave 3 to the upside, that's a sharp move. And then you have, again, a bit of overlap for your wave 4s and your wave 5. So there's definitely an impulsive look and feel to it. Maybe there's a zigzag family structure hidden in this move to the upside, but we can't really give it a priority as long as it's not clear. So an ABC to the downside has a great impact on the probabilities of this 4 hour, like I would say 4 hour time frame, basically this range, on the probabilities of this range. But it can impact probabilities on the daily as well if it moves towards the upside and invalidates a larger impulse to the downside on the daily by moving beyond 97.2k, right? So an ABC to the downside changes the probabilities to taking out this high and as a minimum continue this range for a longer period of time, which means that short opportunities will come later, as I will explain, but short term, the potential long opportunities will become more interesting. So your most bullish case is ABC down. Then we have to count this as an impulse. This is an extended 1, shallow 2, that's then expected, 3, 4, 5, finished A1, ABC down, finished 2B. This can create a larger corrective structure for a larger 2B, but that depends on the move towards the upside, so we'll wait and see. For now, there is the potential for 2B, and then you're looking for 3C. Where are the opportunities here? Well, the opportunities are 5-wave up, 3-wave corrective move to the downside. That's the opportunity. Look for a move up, take out this high potential for continuation to the upside. The other option is a larger corrective structure. This then becomes your bearish scenario. So your bullish scenario with an ABC down is 1, 2, 3, or A, B, and then C. You just look for higher. Your bearish scenario is a larger range. ABC down in a wave X, you would then look for a wave Y, which still means a move up. Or this ABC becomes a W, you get a wave X, ABC down in a wave Y, flat B, A, B, C. Commonly B takes out the origin of A, so it moves below this low. But even though price moves down, you're still looking for a move up. So that's directional bias. Yeah, you may get a move towards the downside, but in a flat B, you still expect to move up because that's your wave C towards the upside. So an ABC down, therefore, increases the probabilities to take out the high in this scenario. And as a bare minimum, you just continue this range, which means that in this scenario, the opportunities for shorts come later. It's not really too interesting after an ABC if you invalidate a wave 4. Shorts become less interesting because you're going to be looking for short-term moves up, wave Y up. Sure, this might be a move to the downside. It's just less interesting because you're looking for up, and in the bullish case, you just continue up. So it's higher risk for the shorts. The short opportunities then come at a later stage. The long opportunities are more interesting depending on your plan and your strategy, right? So 5 up, 3 down, cool opportunity, look for continuation. That would be interesting for the bullish cases. While in this particular scenario, the opportunities would be down there for the longs and up here for the shorts, but it takes time, right? It takes time. At the moment, we don't have a lot of information here yet. We have a move to the upside. We got to wait. And then we have the levels. So these are my volume levels. These are my favorite levels as well. Mind you that this daily naked point of control was already tested. So it's just for my reference. Same with this box tested, value area low tested. But these are like the areas where price found support. So I like to keep it on my chart for perspective. So all the other levels are untouched, and you can copy them if you want to. Then we have time frame horizontals here, including the 1 hour gap low that I have on my chart. Order blocks up here. We have some order blocks, and then all the way at 30K as well. Then we go to the news. We do have some news this week, not today, but Wednesday and Friday we have some high impact news. I don't honestly expect much on Wednesday news related. Of course, volatility can always be there, but news wise, 4 p.m., don't expect too much. On Friday, it's more interesting, so we can expect some more volatility news related. But yeah, this is what's going on. Time here is Central European time zone. So make sure that if you go to the calendar that I use, hexaplan.trade, #calendar here, that you put the time zone on your own time zone. And then we have the conclusion of this video. And what I tried to do in this video as well is I explain different scenarios, but I'm talking about opportunities per scenario, right? So you don't necessarily need to know like this scenario in particular is the higher probability. Elliott Waves gives you a directional bias. You can look for opportunities. Also Elliott Wave based. Make sure you check out my recent video where I explained how to trade pure Elliott Waves. Right? It's literally a few days ago. I think very useful for many. But we're looking for a directional bias here. And the directional bias in the different scenarios is looking for a bit of a move up. Yes, you can move down, but if you go down, we would look for a 5. You go back up. You look for maybe an X, you go back up. You look for a B, you go back up. Or you just continue up if this turns into ABC confirmed. In a nutshell, that's what's standing here. So in basically all of the scenarios, you look for a move up. Impulse down, 1, 2, 3, 4, 5. Wave 5 preferably doesn't extend, as in an impulse. Commonly one wave is extended, which would be wave 3 here, which is an extended wave, move beyond the 1.618 trend-based fib, taken from start of 1, end of 2. Commonly only one wave is extended, therefore you don't expect wave 5 to extend. If 2 waves are extended, less common, can happen, it would be wave 3 and wave 5. But at the moment, probabilities would say no, right? So we would approach this as a normal 5, couple 1, 2s, 3, couple 4, 5s, that's the opportunity. Are we going to get this or not? It doesn't matter, because we know where the opportunity is, which is at the end of 5. Not at the beginning of wave 5, not at the moment, at least because of this shady wave 4 at the moment. It's not a clear wave 4, not a clear corrective structure, right, compared to 2, for example. So the opportunity for impulse down explained over here, right, cool. Then in the other scenario, number 2 here, right, so this again, it's in random order. It just shows the scenarios and the opportunities. ABC to the downside in a bullish case, well, what are we looking for? 5 up, 3 down. 3 down, opportunity, continue up. It's not about sniping highs or lows, it's about sniping probabilities. If you get a 5-wave move up and a 3-wave down, that's your opportunity. No need to necessarily enter there. You can enter there, enter there, enter there, right? Doesn't matter. 5 up, 3 down. That's what's important in this particular scenario. Looking for a bounce up. Continue this range for a longer period of time. The opportunities for the longs and the opportunities for the shorts. No? So shorts come later. Short opportunities later. Long interest comes first. Short term, more interest for longs in such a case. Short opportunities only come at a later stage. So yeah, low probabilities for a multi 1-2 down, 1-2, 1-2 and a larger 3. What we want to see in a multi 1-2. That's basically the scenario where price just continues to the downside on high volume, or you get an extended 5, but I explained lower probabilities. Multi 1-2 would be 1-2, 1-2, larger 3. Lower probabilities as your second potential 1 would be very long in both like time and price. I mean, especially price, of course, like very long move compared to the higher degree 1, lowest probabilities, plus preferably wave 1 and 2's overlap, and then you fall, just like what you had here on a 15-minute time frame. That is multi 1-2 perfection. Bit of a diagonal-ish structure overlap. You can see that every 1-2 basically becomes a little bit smaller. 1-2, 1-2, 1-2, and then boom, down you go, increase in volume. So that is why the probabilities, the directional bias is higher to be in, or at least be interested in looking for bounces. Even if you get a move down, it's interesting to look for moves up. Or this turns into ABC, invalidate wave 4, move above 88K, ABC kind of confirmed. So ABC down, probabilities higher to take the high, minimum continue this range. Short opportunities only come at a later stage, not interesting in the short term. Long opportunities become interesting in the short term, and then we have to observe the structure up, of course. I explained the opportunities that are there. At the moment here, I find it too risky to label this as a 4. I would like to see more information before I would really consider a 5 down. I'd be more interested in longing 5 down as an opportunity from an Elliott Wave point of view than at the moment shorting wave 4 because we may have finished the C there. So anyway, hopefully this is useful, right? A lot of blabbing about the probabilities here and opportunities, but I really want to make a distinct difference between, hey, we have the possibilities and the scenarios, but this is how one would look a bit for opportunities, right? And make sure to watch that video on opportunities that I posted a few days ago. I can really recommend that one. Actually, let's just put it in the end screen. So thanks for watching. I hope this video was helpful or valuable. On the left side, you now see the video that I made recently on how to trade Elliott Waves. I really recommend that one. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott Waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye bye.